Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Thursday, the 13th of May. Starting off with Argo Blockchain, which is not really much of a hero today. We've had the news regarding Tesla and Bitcoin, that sort of U-turn in terms of all that type of situation. So we've seen Argo now actually retest, or actually just slightly go below the £1.25 low of last month. Ideally, there's an end-of-day close back above that. That would give us a bear trap type of formation, and then give us a chance of heading back towards £1.45, which is the floor of the old February gap there. So above £1.25 on an end-of-day close, up towards £1.50 again. Otherwise, we've got the risk of a drift back towards the 200-day moving average at 85 pence over the next 3 or 4 weeks. But at the moment, looks as though the bulls of Argo may get away with the latest push to the downside. On to a rather happier situation, Diurnal, and here we've had quite a consistent trend to the upside for the shares, and looks as though that is set to continue. The situation here is that we gapped up yesterday through the 50-day moving average at 69 pence, and we tried to test the bottom of that gap. The low there, the high there rather, at 67. The low there so far just above that level, so that's actually quite a positive when you fail to fill a gap. And at least while we're above 67 pence on an end-of-day close basis, looking for a fresh move to the upside, perhaps back towards 80 pence plus, which was the initial April resistance, the peak there around 84, and that's probably a reasonable target for the rest of May. Big picture target, obviously a retest of the £1 area, which was the March peak, but at the moment probably going for the low 80s as a conservative target, especially in current stock market conditions. Yesterday we had a late announcement from Eurasia saying that it's not selling all of itself, but perhaps will now sell a greater part of itself. Here the news, we had a gap to the upside through the 50-day moving average, which was great. But unfortunately, we have pulled back a bit. Reminds me a little bit of the move that we had at the end of March, so a gap higher there, and then that was a sort of one-day wonder. But the overall picture here still a constructive one. We've got this broadening triangle, which has been in place since the shares, since the shares were suspended, really. So broadening triangle, that's normally a very bullish setup. Top of the triangle there, or the channel there, up towards 70 pence. That's clearly the best case scenario target at the moment over the next 3 or 4 months. But I suppose in the near term, probably just most bulls would just settle for 35 pence and that peak that we had in March. In terms of the downside, looks as though there's a pretty solid wall of support there just below 25 pence, and so 25 to 35 pence range may be the correct expectation for the shares over the near term. Moving on to one of today's more solid situations, a decent announcement from Goldstone Resources. Here we've had we actually had a bear trap yesterday, as if the market was anticipating something nice today. Bear trap rebound from below the 50-day line at 11.7 pence. While we're above the 50-day line, looking towards the top of another broadening triangle here. In this case, that's been in place since the beginning of last year. Floor of the triangle towards 11 pence, and the top of the triangle up towards 23 or maybe even 24 pence, and that could be seen by the end of next month. Clearly, if we manage to break or have an end-of-day close or a weekly close above last month's peak of 15.5 pence, that would inspire quite a lot of confidence. But it looks as though the base building and the accumulation has been working and is pretty solid for Goldstone at the moment. Sticking with the same kind of area, we've got stock which is pushed up quite nicely, Kavango, over the last week or this week. Here we broke that February resistance line at 3.5 pence, and above that we've been looking for as high as 6 pence as soon as the end of next month. And the way things are going, it looks as though everything is on track for that kind of scenario. Interesting that we've got all these broadening triangles, which are normally very bullish, but not such a strong overall market for shares at the moment. On to another trending situation. Here we've got LUSCO, and here we can see that another similar sort of situation in terms of the broadening triangle. So the top of the triangle there heading towards the £4.50 level. That could be seen as soon as the end of next month. And in terms of the floor of this particular formation, the 50-day moving average there, I suppose, is the line in terms of the bull argument. But while we're above the 20-day moving average at £3.17, looking for up to £4.50 by the end of next month for LUSCO. Moving along to another situation which is providing some cheer on a rather dreary day. Here we've got Lexington Gold, and a nice sort of breakout in the making. In fact, the breakout really started already earlier this month with the break of that resistance line there around the 3.5 pence level. While we're above that, looking for further progress, and that could be seen up towards the top of a rising trend channel from back in April last year. That's promising us a target as high as 6 pence as soon as the end of next month, and certainly while we're above the 3.5 pence area, that's where we would expect the shares to go. Very positive that we haven't actually been below the 200-day line since February last year, and all the support points in there have happened above that particular line there at 2.88 pence. That normally means that a re-rate for a stock or a market is on its way, or in this case perhaps long overdue. On to Nightcap, and situation here is that we've had the shares trying to recover from a gap to the downside. There was a great trajectory at the beginning of the shares' lifetime, but it seems to have gone more into consolidation. Current situation, though, I would say that the range between 24 pence and, let's say, 36 pence is very much in place, or 37 pence is very much in place. And while there's no end-of-day close back below yesterday's support at 24.5, there's a chance of the shares maintaining the recent range they've had since February. The next situation is probably one of the best of the week so far, Orion Resources. Here you'll be able to see that the shares did what they had to do, really, in terms of bouncing off the 200-day line at 0.68 pence. They then broke a line of resistance from February, which I sort of highlighted a few days ago. Current situation is that while we're above the 50-day line at 0.9 pence, we're looking towards a, well, not only 1.2 pence, which was today's initial peak, but up towards early March resistance at 1.4 pence over the next 2 to 4 weeks. Big picture target here up to 2 pence, which is the top of this rising trend channel that's been in place since the beginning of the year. So looking pretty well set up for Orion at the moment. Easy play with the property market looking rather buoyant at the moment on the market. Not quite so easy in terms of the charting situation here. Here we've just really got the 80 pence support area that's been in place since last September, so basically you're trading against that. Still the chance maybe of it just the stock just taking out the stop losses below 80 pence and then reviving itself. But at the moment, 80 pence to 102 at the 200-day line looks to be on tap for that particular stock. Finishing off with stock which doesn't get much airplay around here or anywhere else, really, I suppose, PHSC. Nice gap through resistance, one of the favoured setups on a technical basis, and while we hold above 15, looking for 27 pence, which is that resistance line there on the daily chart from back in April 2019. So if we can hit that over the next month or so, I think that would be quite a result for the bulls after this gap that we've seen, which is looking pretty healthy. That's it from me today. More updates tomorrow.